One question I wanted to kind of go around the group, because I'm really interested in this myself, and it's something we've never really talked about before, is how everyone funded their business.
Offshore accounts in Dubai.
Hello, and welcome back to Restaurant Roundtable, presented by Kraft, Heinz Away from Home. We are a podcast for chefs by chefs. And we actually have a guest with us today, Mr. Will Zell, who's joining us. So today we're going to be talking about restaurant funding, something that I wish that I had been able to listen to a podcast like this before getting into opening our restaurants. And we have Will with us today, who has been investing in startups since 2006 here in Columbus, Ohio. Will is the co-founder of Asset Watch and the managing partner at Vessel. In 2012, Will and his wife also opened their own cafe called Sweet Aroma Coffee in Bellefontaine, Ohio. So you are, as we are saying today, a Swiss Army knife of everything from funding to opening restaurants. And I think before we get into kind of like the meat of what it is we're talking today, I'd kind of like to give a little primer of some of the different ways to raise money, because there's 20 different ways that you can raise capital to start a restaurant. You're an expert, and I'd love it if you could, introduce yourself and talk about different ways to raise money for a restaurant.
Yeah, well, thank you all for the opportunity to be with you today. This is exciting. So, when you look at opening a restaurant and capitalizing it as a small business to begin with, there is a kind of toolbox of potential funding options that you can utilize, from self-funding, being able to bootstrap, which can be very difficult given all of the input costs generally associated with building out. But if you do have personal or direct family wealth to be able to fund the startup costs, you can. The second would be friends and family. So outside of just you and your direct capability to fund, are there relatives or friends within your close network that would be able to provide capital to help you build? All the way through unknown private investors, so not friends and family, but individuals who would be investing with their private wealth, their own personal capital, through to professional investors, which would be private equity firms, venture capital firms, and we can get into some of the difficulty of that in the early days, all the way through traditional lending sources or financing sources like banks. And then within the banking system, there's a number of different programs, from SBA loans all the way through true traditional loans to utilize. So those are the general sources, if you think of the buckets where you could find lending. And then there's also a kind of spectrum of how you would structure the financing for a restaurant, all the way from debt through to equity. And kind of to set some definitions, obviously on the debt side, it is like getting a loan, if you will, from any of those individual sources where there is an expectation to pay back that loan with an interest rate associated to it, and a particular period of time in which that can be structured, all the way through to selling an equity stake in your business, where you would bring in capital from that outside investor, and you would give them a percentage of the business ownership in return. And there are pros and cons for each of those, but if you think of those as buckets of potential sources and then how you could structure it, and then there's like 100 derivatives from there in terms of how you structure it. I'm happy to give my thoughts on, I think, the things that make the most sense too.
Yeah, I definitely want to get into what the pros and cons of each of those ways of raising capital is. But before that, you own a coffee shop, so you're familiar with the hospitality industry as well. How does owning your own restaurant compared to the world of startups?
Yeah, so what we do at Vessel is we primarily invest in technology companies, technology startups. So it's very much venture capital type investing. When it comes to venture capital investing, you're generally taking a big swing to put money into a business that is very speculative. So you're generally buying equity for that business in return for the capital that you give them. And there's a hope that you may get it back at some point in the future, but a reality that you might not get it back. With that said, you're placing a large number of investments in companies that have the potential to give a very significant return on the capital. So I'm investing in a company early, and 10 years from now, that could go from just a startup to a company that's generating hundreds of millions of dollars in revenue, and the return on that investment could be very, very big. So that's a very particular type of investing that's probably not ideal for restaurateurs, for people within the hospitality industry that are just getting going, and kind of being on the other side of being a founder and operator. And before we get too much into this, I want to give a major shout out to my wife, Beth. She is really the one that has made Sweet Aromas Coffee a success. She's the operator of it. I'm much more as an advisor to the business and consumer of the product, but she is a rock star and a champion at what she does and a world-class operator. So with that said, when you're looking at the hospitality industry, number one, I love it because you have the ability to create a really unique experience and directly serve the public every single day and serve your local community most of the time to create something that is a different experience than what is out there. But you've got to be realistic, especially in how you're thinking about capitalizing that. So when it comes to the best strategy is, especially if you're looking at kind of location number one to get things going, I would really focus on the friends and family, and I would focus on depth type structures that would have runway built into them to allow you to have time to really stand up the business before you have very meaningful expectations of returning capital to investors.
Would you say that you invest more in the restaurateur than the restaurant then? Would that be a different way to kind of frame it?
Yeah.
A restaurant is like a concept, but a restaurateur is the idea. So you would invest in the intellectual side of it, right?
Yeah, absolutely. When you're thinking about like as an investor in approaching a business, obviously there's the market, the business itself, but so much of the returns that are driven both to success, positive and negative outcomes, are really built on betting on people. And you're looking for some very common factors for entrepreneurs. Do they have the grit to manage through the crappiness that is inevitable when you're starting your own business? Do they have the focus on value and understanding what it takes to pull various components together to create something that customers will love and that they will come back for on a repeated basis. So you can build long-term relationships with customers. And then do they understand the economics of a particular business to be able to build it profitably? And again, tech startups are very different from restaurants, but those are the kind of common components that you're looking for, especially in the restaurant industry.
So one question I wanted to kind of go around the group, because I'm really interested in this myself, and it's something we've never really talked about before, is how everyone funded their business. We don't need to name names of investors or anything like that, but just kind of, did you get a bank investment? Have you looked for private? Did you give away equity? And then kind of how's that going for you? And then what I want Will to do is kind of to explain to the folks at home, like kind of what the pros and cons are to, like you said, the private investment. So
my first startup was funded through private investment, Kickstarter. I mean, it was a while ago and Kickstarter was still a thing, but it showed community buy-in, which made the rest of the fundraising go a little bit easier. It was such a big process and it required so much capital to go through that process, private placement memorandums, all of that, that when it was time for me to start the venture that I'm on right now, I did it with my own money, and it's definitely made my growth slower, and I could go out and look for loans or anything like that. But right now I've appreciated that I can grow kind of at a slower pace and make sure that everything feels really solid before I go out and try and expand. So I'm making mistakes at a much smaller scale financially. And once that's really solid, then I'll probably push harder.
So we did a combination of self-funding, as well as the lending route. So we did the Lift Local through the SBA, and then we also received funding from Freedom Equity, which is a nonprofit that's based here in Columbus, where their goal is to provide funding to minority-owned businesses. We met with a couple VCs, but they're not interested in the restaurant industry. We would actually be able to expand a lot quicker if we were able to get an investment.
How did you find those programs? Just like Googling or?
So we found out about the Lift Local just meeting with the branch manager at one of the local Huntington Bank. Now I will say, yes, it gave funding, but it came at a price from the interest side because it was market plus prime, so a lot higher. We have a relationship with the executive director for Freedom Equity, so their rate was about 5%, which was great. But yeah.
Would you recommend doing that route again, or?
I mean, I would definitely reach out to Freedom Equity if you are here in Columbus. The turnaround time is very quick, lower credit score, and their goal is to put money like into the hands of minority owned businesses. The Lift Local was a good start. Now you do have to put up 25%, so if you're in a position where you have that, you're using a little bit of your money to get somebody else's money, but you're paying a higher interest. So
Offshore accounts in Dubai.
I'm not allowed to talk about what happened in Vegas.
No, I kind of have ultimately it's private. However, what got me there was the mindset of BC. That was a lot of conversations because I couldn't justify to myself how I could invest in a restaurant as a person who was working in a restaurant. Like, I wouldn't give money to a restaurant.
Yeah.
So it's very hard for me to imagine, like, how would you give this and expect, like, on the margin for a restaurant that we were probably talking about. Like, I've seen a lot of failed businesses. So I looked at what is realistic for payback, and I was like, there's no way that somebody who has just kind of money is going to want to invest in that. I don't want any emotion attached to it. So I avoided investments for close to 7 or 8 years because people were just like, hey, we want to throw money at this thing. And I was like, it's not that easy. You're not seeing like what the margin looks like, or what happens if I break my leg, So when I split myself out of it and said, hey, what do I offer intellectually? Like, what is Abishar doing for the business as a human or a being, or what is that worth? It turned into me being an equity, not a dollar amount, a dollar amount associated with an equity. And then having no background in finance whatsoever, and listening to rumors. So I was like, I think I need this much. So I asked for a number, which was way high. And people are like, what do you need that kind of money? Well, which is interesting because the people that will generally give you the money there, we're talking about hundreds of millions, right? So I was like, this is what I need. They're like, well, why do you need that? And I was like, what are you talking about? Like, have you seen what the shortage is like? Have you seen what equipment things were like? Yeah. And guess what I ended up using is I only like to ask once. So it all went to the correct place, but I had to ask for an uncomfortable amount. And so I held off for 10 years until I was like, well, I know it's going to take this. So let's get it this way. And then I know that I'm not going to spend 15 years working in this specific restaurant. And if it fails, I don't want to like live this the rest of my life saying that I failed a restaurant. I don't have any value outside of that. So I kind of tried to do it this way and then tried to not Bob Ross it, where it's like, if I had to sell my restaurant workflow, would that be? And then made my best guess. But with that, when I had that out, people were like, man, you have your shit together. And I was like, I have no idea what I'm talking about. But if I were to guess, maybe this would be the closest that I could do. And if this is the result, that would be ideal. Let's start at the divorce. Let's see what the worst case scenario is. And we don't want that to happen, but if the worst condition is acceptable, then you can invest. Yeah. And then I think that perspective changed. And still I was like, I don't like, until you see that money hit your account, you're always terrified. Like, is it going to happen? Is it going to happen? Because there's a lot of promises up, as we all know, people that say they're going to do stuff and they just don't come through. Okay. You're like, oh, I already signed a lease. So now it needs to come. So with private, I think that's the risk, is you have to go word of mouth. And I had all my deals signed, but it's still like, if somebody doesn't want to give it to you, they don't give it to you. It's very challenging because you evaluate that in the way that we see money every day, which is we see cash flow. We don't go like, hey, we want to spend $150,000 to build. Like, that's not normal for us. So you have to disassociate the dollar amount with the dollars. What are these stuff?
I talk about that a lot, like where in my private life, like $1,000 is a ton of money in the restaurant. It's like changing hands every 3 seconds. It's like you need to like shift your brain. For your investors, are they partners or are they just investors that, like, do they have a say in anything, or they
so I opt to offer them a say because I think any advice is useful advice, and I at some point want to be an investor too. So my goal isn't just to like open a restaurant, it's also to be like, there's so many people that want to open restaurants have no idea how. So if I can help with that, as somebody going through it from knowing nothing to getting somewhere, I hope that I can gain enough experience. And so I ask questions, even of the investor, like, hey, how are you able to do this? Can you teach me how? Because like, that's ultimately, we're trying to make the community better. I think this is the goal of it. That's why people invest in Columbus, and that's what they should be investing in. Not, hey, you make really good hot dogs, let's make a million hot dogs. Like, I don't know if that's the best. There's other businesses that can do that a little bit better. So generally I offered, I just put in my terms like, hey, like, I want you to have this amount. Because what you're investing in is not just now, but 5 years from now. And I'm going to ask you for advice a lot of times, and I want that to be valuable too. So I know that people say advice is free, but I find worth to it like more than any dollar amount. So it kind of works both ways, and then we both raise our value at the same time. So it works together. And again, that's like a debt investment is whatever. For a restaurant, there's better ways to do that investment, I think. I don't think your restaurant's the best case scenario for that.
I tell whenever I need to raise money, I tell anyone who will listen, like, when you invest in a restaurant, you're not doing to put your kids through college. It's about what investing in a restaurant says, and you having ownership over something. It's almost like a vanity play. Yeah. Like, it's not generally something that I would say is like something that you're going to make a ton of money off of. And we can go into the statistics in a minute.
And you have to go to like,
what's the expected ROI? Like, with the terms?
I mean, it's on
The investor is also like when you court an investor, it's also a little bit different because you want to find the right person, not the person that's investing in, hey, I was on TV. I want that person to be in my portfolio and I can collect them and say, hey, look at this guy that I made big. That's not generally who you want to have on your investment for our business.
Okay.
If you find somebody that's like, hey, I see that, as you were saying, the grind, the value, you know how to run a business. You probably have 5 or 6 things that you see. And like, I could say that a lot of things that we restaurant owners offer outside to investors, like, hey, I noticed that it takes me 15 steps to press this into this POS. What if there was 5 steps instead? And it saves time and it saves money. Like there's so many outlets just because of the volume of things that we do in restaurants that it offers so many other services other than the actual product they offer. And efficiencies like Toast, they're killing. So an app provider, like they don't know anything about restaurants.
Well, I think the hardest lesson
Like-
I learned from getting investors is you have to say no to them. Like you have to say no to not just like Avishar was
You have to
saying.
know what your
You
no is,
don't want
yeah.
to take everybody's money. You want to make sure you're finding the right person who's giving you
Just
the right money.
interest.
Yeah.
So what should they be looking out for?
Yeah, I think there's a few different things, and I'm really excited to hear your perspective on this. But for me,
you, yeah.
opening Chapman's, we were looking to give away equity in the business
Okay.
to raise the money, and what we ended up doing, because our investor he wanted me to own 100% of the business, we just decided to do a debt structure deal.
Okay.
And then the pandemic happened, and we ended up losing a ton of money in the first year. And for the whole time, the interest was collecting on it. So we took what was, let's just throw out a square number, a $500,000 investment that turned really quickly into $600,000. Where if it had been an equity partner, it would have been okay. Like it just would have been all right. Like we did crappy for the first year. Now I can start paying you back in year 2. But instead, we kind of dug ourselves into a bigger hole. So that's one scenario of like talking about, I should have, to Kate's point, I probably should have said no to that and been like, look, I am trying to raise an equity deal. I'll go to someone else if I need to. But it's kind of hard when someone's got, again, whole numbers like $500,000 dangling in front of you. Like this fulfills everything that I need to get the restaurant up and going. It's really easy to just sign paperwork and get the money in the bank and go. We didn't know pandemic was coming 2 weeks later.
Yeah.
So that was kind of just crappy timing. But before you even go to investor, you need to come up with a deck. You need to talk to people about what industry, you need to come up with a P&L basically. You need to, Kate and I were talking about this before we went on and started filming. You need to go to a lawyer and get paperwork done. You need $20,000 in cash just to give a lawyer before you get
mentioned
started.
it too. Like you need to have your exit strategy before you can even talk about starting a thing. Before you know if you're getting investors or partners or loans, you need to know what it looks like when you have to walk away.
I would say some of it is not just you need to. I think some of it's kind of the why.
Yeah.
I think for opening the business, other people's lives are dependent on your decisions. And for that reason, I look at the divorce because I look at what is like everybody that's surrounding me. I can figure it out. I'm one human being. But if somebody's devoting, if I was an investor to this person who I am paying to come in here, so I am investing in their time, what does it look like for them if this doesn't work out? And we try to find a way that's like, hey, this is how we take care of everybody before me. And it has to start with like, well, if the pandemic happened again, how do we build our businesses so they can adapt or be modular, as opposed to I have this fixed idea that will never go service, that's challenging these days. So I think, it's like, I don't know if that people spend enough time thinking about that. There's that like confidence that you have when somebody tells you that you do a job or something unique that you're like, oh, of course I'm going to fluff it up and it's going to sound great. But like, I always try to look at it like, well, what if it's not? Then are we out of steam, or is it going to ruin us, or like what's going to happen? Is my entire life now ruined because my idea failed? And I think that's challenging to think about when every day we get such like adrenaline bumps, because like, we're doing this, we're giving people food. Yeah. They go, you're doing an awesome job, and you go, cool. What else do I need?
Yeah. Well, what do you think of this conversation?
No, I think all really good, unique insights, and very different perspectives, which is great. I think a lot of it does depend on the why and the business that you want to build and kind of how you see it 3, 5, 7, 10 years down the road. It's a really, really, really important part of it. Meaning if you're going into a concept to build to scale and you know that you want to sell it at some point, and there's a strategy for that, that's a very different approach versus I'm starting something that I want to do for the next 20, 30 years of my life. This is my dream, and this is what I want to do. I think between those two, so if I would look at those as two scenarios, I would feel much more comfortable on taking equity on if I have a kind of clear view towards an exit of 3, 5, 7 years down the road. From an equity perspective, an investor doesn't get paid back until there's an equity event, right? Or distributions that that could come out of the business. But by and large, when you're looking at the good return of where I get all my money back plus a gain, it's that exit event. If I'm looking at more of something that I want to do, for 10 plus years, single location or a few locations at most, then I would think more about a debt structure. At the end of the day, though, a lot of this boils down to like, what can you do, right? What is your network of relationships? What is your personal financial position? Who are the relationships that you have? And people are on that deserve to get a shot at opening a business are on very entirely different places on that spectrum. What I would kind of go for an ideal scenario on starting starting with the first location on a restaurant is I would structure a convertible debt facility. And what that means is it's a financing that starts out as debt, but then has provisions in the actual debt instrument itself where the debt can be applied or can be converted into equity. And I think you bring up a really interesting, like 2019, who had a global pandemic on their bingo card, right? As something that would fundamentally disrupt the restaurant industry. And I think anything moving forward should take that in mind. So in that convertible note, the ability for the restaurateur to trigger a conversion into equity in the case of a scenario like a global pandemic or something else that would fundamentally disrupt the ability to pay back.
Where were you 5 years ago for me?
I would not have had that on my radar, though. I mean, I think that's the beauty of something like this is the lived experience, right?
Yeah.
Through something that is once in a lifetime.
We negotiated a force majeure into that contract, and I was looking at it like, we would never need any of this. And then 2 weeks later, I'm like, oh, wow. Thank God we did some of this.
Yeah.
So I'm going to throw some statistics out there and then a question on the back of it. But most people know this stat. It definitely has been changing for the last few years because of the pandemic. The new data is 17% of restaurants fail within their first year and 62% fail within 3 years. Wow, that is sobering. What are some of the most common financial mistakes you've seen, not just restaurants, but businesses make?
I'll answer this partially in kind of financial. The other is like launch mistakes. Because for me, especially in a restaurant business or any retail business, so much of the success to get past year one is the momentum that you build in like months 1 through 3. And it is not at all, if you build it, they will come in the restaurant industry.
No, the lead up time that you need to. Yeah.
Yep. So the lead up time and having a really solid plan of how you are going to kind of pre-opening build momentum towards people being interested in coming. And then through day one opening into, the kind of first few weeks, first few months, making sure that you're building momentum and giving people, like when they come in, number one, make sure it's an incredible experience, right? Because people will always be making value decisions. If I come into a new restaurant and I'm paying the same amount of money and getting a worse experience than other places that I have gone to in the past, I'm not coming back again. If I come in and I pay the same amount of money and have a better experience, that's a likelihood of me coming back again. If for somehow I come in and pay a little bit less and have an incredible experience, I'm your customer for life, right?
Yeah.
So people are always making value decisions. And what you want to be able to do is when they come in, you're delivering them a much more incredible experience than they could have at all the other places that are available to them to eat food, right? Which is, it's not just the similar type of business, all right? It is all the decisions and places where they could go to spend money on food. And so how do you create that experience through the quality of the product, the customer service, and the atmosphere itself to get them to say, I want to come back? And then how do you incentivize them to tell others about that experience that they had? So it's really building momentum early on. One of the things that my wife did, which was a genius move, and she'll tell you she saw it somewhere else, but she executed it very well, is when we launched, we had bumper stickers with Sweet Aromas coffee. And we did basically, if we spot a bumper sticker out in the community, we'll stop and we'll give you a $5 or $10, we could do whatever it was, but basically a little gift card that we would throw on your windshield, basically, if we saw you out in the community. And it was part of kind of that early launch marketing that we did. And it kind of drove two things. One, people loved it. They loved being spotted. But number two, if you drive around Bellefontaine, Ohio today, I would bet $1,000 that if you spent an hour driving around Bellefontaine, Ohio, you'd see at least 5 cars today with Sweet Aromas bumper stickers on it.
That's really
She created an army of little billboards.
We might need to have you back when we do our next marketing episode.
But those are like momentum building things.
Right. And so when a restaurant opens, typically it loses money for a period of time. I assume that's true with most startups. What is your recommendation for the amount of runway that you should leave yourself when raising money?
And it kind of goes to what you were saying on like having the divorce in mind. From an initial capitalization perspective, I would fund at the startup the most pessimistic view of your business. If you're in the position where you are, starting a business, you're doing it with optimism, right? Mm-hmm. Nobody starts a business because they're pessimistic on their ability.
I'd say realistic. Yeah, just say realistic.
So when it comes to financial planning and building runway, I would fund the most pessimistic view that you possibly can, and I would have months of runway, probably 6 to 9 months of runway on hand, if you can. It's tough in the restaurant business for sure. Yeah. It's very, very tough in the restaurant business. But I would, regardless of what the numbers look like, I would try to have months of runway on hand.
In your experience, is that something that investors understand, that restaurants lose, or just any venture loses money for a period of time? Or is that something that's like people start knocking down the door for their check and you're like, I'm still in startup mode?
Yeah, if they don't have that expectation, to your point, I wouldn't take their money. The restaurant business is so difficult in and of itself, just when you're looking at how do you generate enough free cash flow for you and your family, that if you have, and again, this is tough because you have to balance capital with the needs that you have. I would do my best to really understand. I would have the investor articulate to me what they know about the restaurant industry, and making sure that they understand that this is going to be a while before they get paid back. And I'd make those early terms as founder friendly as possible.
So there's kind of a common saying in the restaurant industry. It's I pray for 20%, hope for 10, and settle for 5. Most restaurants actually settle into the 3 to 5%.
And it depends on
range.
the type of restaurant.
Yeah.
Because full service versus fast casual is.
I mean, that's a good question. That is for us, I would be ecstatic with 10% return. Like, what's your bottom line goal?
We average anywhere between 7 to 8.
I would be so stoked with that.
Yeah. Plus, if you're like a premium steakhouse, 3% at a $1,000 check is a lot more than 20% at 5. It's
because
kind of putting two models against each other.
Yeah, full service, you're supposed to expect about 3 to 5%. Fast casual is about 6 to 9. But full service, and to your point, with fine dining,
she's in trouble. So if she's in bed, it's 3%. It's
the overhead, labor costs, supplies, food costs.
Yeah, I think it's always just a balance, your product versus your labor. Because the labor's, everything has specialized labor, right? So depending on what your labor goals are, you would adjust based, right? Yeah, you can afford the labor, you can afford.
I mean, the typical wisdom for restaurants, I know all restaurants are a little bit different, but as you look at a P&L, there's what are called variable costs and fixed costs. Fixed costs are stuff like your rent, your power and water, which I know those fluctuate a little bit, but they're generally not necessarily a function of how busy you are. The variable costs, the things we can control, are generally labor and cost of goods sold, COGS. Those two things added together are typically called prime cost.
Yep.
So the conventional wisdom is that you want your prime cost to be about 65%. In these times where inflation is killing us on cost of goods and labor has gone up, how have you guys controlled your prime costs in this environment? And more specifically to you, how have you seen this affecting not just the restaurant industry, but just the industry writ large?
Well, just in our experience at Sweet Aromas, this has been a crazy time, right? Because ultimately, at the end of the day, it comes down to pricing, right? Mm-hmm. So you can't necessarily control the cost, but you can control pricing. And when over the last couple of years, both the labor costs and the food costs have been just insane. It's like, how often are you resetting pricing? And we tried to keep this balance, and Beth has done a really good job, but this is, I don't know, we've never in 12 years seen anything like the last couple of years.
I mean, at the end of the day, it just gets passed along to the guests because they're like has
which
to,
sucks.
right?
Correct.
That's, I think, what we're feeling a lot of the pushback in the industry right now is people are like, why are scallops $40 for 3 scallops? It's just like, that's the cost of the stuff.
Yeah.
I think there's also this perception from the customer that restaurateurs are rich.
We've talked
And
about
we're
this
just
before.
putting it in their pocket.
Some of the
Yeah,
staff
New York,
thinks
yes.
that. Some of the staff thinks that too.
And they were just greedy and trying to like put more money in our pockets when honestly, I'd just like to put some money in my pocket.
Yes. We actually had a funny scenario to go on a quick aside, but we're here in Ginger Rabbit, our jazz lounge. About once a month, we do a dinner series here. We'll tag up the jazz and food and try to create a cohesive environment. And a grad student from OSU came to me and said, I really want to do my senior thesis here. It's about the working class food of Ohio. I was like, okay, like that sounds like a great idea. And in my mind, I'm a working class person. And we released the tickets for it. And it was like $75 a head for a 5-course tasting menu of the food, wherever. And we got so much backlash. I'm like, you're calling it the working class dinner and like nobody can afford it. And I'm like, whoa, do you guys think that I'm like not with you on this? Like I'm, I'm not rich.
interesting.
So yeah, it was
Honestly, I think that is a specific instance given a population. I don't think it's everybody necessarily because you still sold tickets. What some people say is like a pound of feathers and a pound of lead do weigh the same, but it feels different.
Yeah.
When someone is coming at you with something, it's different than, hey, I'm doing it. So I just remove the personal aspect and I go, hey, does it meet the goals that were required? Are we doing the right thing here? As limited as everything else in this entire world, there's no shortage of opinions. Yeah, there's no limited opinions. There's unlimited opinions. So you will always receive them. And it seems like those are the ones that we let you discuss the most. But I always look at like, how much time do I want to invest in deciding whether this is a valid point or not? And it can be valid for that person, but if that person's not going to buy the ticket anyway, if that's the case, would they have bought it at 65? Well, would they have bought it at 55? What's the price point they would have bought it?
Well, speaking of that and flipping it back to you, you run a very nice restaurant with a, to me, moderately priced, but in the scheme of things, expensive tasting menu. Have you felt pushback on pricing or any of those things in these times?
It's all like when I was raised, I couldn't spend over $10 at Longhorn Steakhouse, and I couldn't get a steak under well done. So I had more than one towel. And it's not that we couldn't afford 2 towels. My parents you only get 1, right? So the way that I was raised is different than the way that I kind of behave now. What I look at is value. As he was saying, in value is if I'm charging 140, I want it to feel like 300. I had to go as somebody that was born in Columbus. What does $300 feel like to me? And it's different than New York. So what we charge, I would say, is it appropriate? I think we're charging actually probably less than what would be the par or if it was in another city in terms of what I want to pay my staff. That's the only thing is like the money that goes out. I see the labor costs. I see the same goods. Our food cost is very, very good because of labor, because our staff cares to go from raw ingredients to processed ingredient. They look through, they sort through things because we pay them to do that, and they enjoy it. It's like you can't have one you have the slider will turn, but you can't make the cost go away. You can't just turn it to 1% food cost, 1% labor. That's not realistic. Somebody's suffering you.
Do you have something that would trigger like a price increase? I know right now it's a steady thing. Like, do you have things that will trigger that?
We do. Honestly, we ask our guests first. We ask as best as we can. We ask our regulars, the ones that support us the most.
Yeah.
Say, hey, this is what we're looking at. We'll just be transparent. We're like, hey, if we raised our price by $10 and we added some more value, say, hey, we got creative and we added, I don't know, we went from, so I would say it's a good value. We were at 125.
Right.
We were serving 6 courses, or at 145, we're serving 15 courses.
Right.
I don't know. It sounds pretty like a good value to me. It seems like if that's understood, then you can look at other examples and draw it back, because you can make a comparison and say, hey, if you go to a Taylor Swift concert, how much do you pay for a shitty ticket? You're spending $500 for that. Do you see that same value, like the joy that you get at that concert? Can we provide this? I'm not saying one is work or the other. I'm saying, can we provide equivalent joy at a restaurant? And that's where we'll say, okay, let's add more service points. Let's do those things. But we need to charge more to be able to do that. So we'll get some pushback, but generally, like what we've built is trust over the course of 10 years. Like we've always undersold ourselves up till this day, and we still are kind of underselling ourselves. But if we don't set our own value and we conform to what we're told, we won't be able to fund our business. Everyone will lose.
I really like what you just said. I'm going to tie it into more advice that's given out, which is don't price it the way that you would spend the money. I like that you figured out what the price needed to be, and then how can I make it something that I would pay for?
Yeah, and that's the part that sucks.
Like,
Is
what value
there
can
is a
I
needed
add?
price, and when you think that you can be a certain way above or below that price because of your ego, then things get a little tough, because it's just out there. It's a fact. You can't say, hey, this is my labor cost. I'm just going to because I'm smarter, it's just going to go away. You're going to see your bank account dropping, and like that's scary time. But when I see that stuff happening, like it's too late. What did we do wrong to get to here? We're already in the weeds. We should have predicted. So we tried to forecast to be like, hey, what would happen in these months, these crappy months? What's going to happen? And the accounting team that we use is pretty good. They give you some projections and baselines on those things. But it's always like we're trying to look for. I say when times are good, we prepare for the bad times. When times are bad, we know they will pass. If we can keep those in check, kind of, then the whole picture seems to work out. And then our job as owners is to make sure the staff is aware of that. Like, hey, it's okay. It's a slow day today. It's not the end of the world, because you don't want them to feel like we don't know what we're doing. That's the worst thing you can ever do to your staff.
Yeah.
I do think it would be an incredible series, and it's probably multiple series of really getting into the realities for restaurateurs, because I think you hit the nail on the head. There's this perception in the community and the public of, oh, you own a restaurant, you've got to be wealthy. You're just, pushing that taking all the money, and it's a very, very, very different reality. When I look at my wife and what she goes through and the stress and the process.
And as a restaurateur, wouldn't you want someone who is doing this and putting their body at ease and doing all this work? Wouldn't you want them to be wealthy? Like, is that a bad thing?
You'd want them to.
I think that's what you'd want them to do, because how much do you invest in it? It'd be nice. I don't think bad.
How I remember shooting up to like my first meetings with potential investors and like trying not to let them see that I had to pop my hood to unplug the power from my battery to turn my car off. Like there were just things that needed to be fixed.
Like, hey, I got this battery charge in the back of my car.
Yeah,
Like,
exactly.
I think that's the sort of people you want to look for, because people are people, right?
Right.
Just a different values associated, I think.
Perception versus reality will always be the thing.
Last question that I have for the group. If you could go back in time, and I'm not talking to our childhoods, I'm literally talking like 5 years, just with what you've learned since the pandemic and learned since all of us have opened businesses pretty much in that time, is what piece of advice would you have for your younger self about funding your restaurant as it exists now?
Mine's going to be counter to a lot of advice, because one could associate with what our model is slightly disruptive. We are aware of the trends and we've been in the industry long enough that we know where it doesn't work. So we just try to avoid all those things. But that's based on, mine was that I think I perhaps waited too long. There's a runway and eventually it runs out. So you have to kind of balance. It's not one or the other, but you should evaluate your options at the time and decide where you want to go with it, and then make a plan. And I think what I would say 100% with transparency is like, yeah, you should probably plan more, because even if you don't have all the plan, at least you have like a framework that you can develop and tune in and refine. And then when it comes time, like all of those things will be helpful.
I would say that being able to walk away. Like sometimes I would get so excited, and I knew that maybe this wasn't the right first step, but I still took it because I was excited and there was inertia and momentum. I would like to go back and tell my former self to just feel comfortable saying no, walking away from an investor, from a location that you've invested a lot of time and energy into, walking away from the idea that you're going to open 7 days a week. Start as small as you financially and feasibly can, and like add on to it, because it's a lot easier to add on than it is to take it away. And especially if your plan is around a place that's only open this amount of days, doing this amount of stuff, if you can add on, it's good for everybody, probably for you too. So I think scaling back my expectations and walking away when it doesn't feel like the right fit, that would be my advice for me. And also more dedicated outlets.
So my husband's not here, but we both would say that we would have did this. We were much younger.
We all were.
I'm 43 and he's 51, and we opened in 22. So we were after COVID. We have never owned a restaurant like ever. So we went like all in. Yeah, we would have did it when we were in our like late 20s, early 30s.
So you just would have rewound even further
We would have
back.
just went back.
I mean,
turned the
it's
clock
refreshing
back.
to know that you're like,
But-
I would have done this again, but I would have done it earlier.
Yeah, you have more energy. It's a lot of work and stress, and it's a lot. It's not just, financial stress, just stress on your body, your mental. Yeah, a lot more you can endure when you were in your mid to late 20s
But
and
I
early
wonder
30s.
if by
But
doing it when you're older and a little more tired, you also have a more reasonable expectation of what you're capable of. Like, I think if I were younger, I'd be like, oh, I'll just work harder. I'll just work more hours. And now I'm like, I don't know if I can actually work more than 16 hours. Maybe I need
Yeah.
to sleep a little.
But I would have did it for myself. I was doing it for someone else.
Yeah.
Like I was in corporate, I was a buyer, so I was putting in those hours,
Yeah.
for someone else.
But it wasn't for
and I
you,
could have
yeah.
did it for me.
I think that's a good one that a lot of
yeah.
people often forget, is sometimes we get in the mindset that we can overpower a business in which we're working at, and that doesn't benefit either the business or you. Why not use that energy when the time is right, or build it into your toolbox, or hey, I should avoid doing this thing and do it that way, and let me invest it this way. Let me view myself as an investment, and just as much as the product.
Yeah. What about you? What about you?
It is, and it kind of ties into what you were just saying. It is, how do you build in an intentional switch where you can actually turn off the business, which I know is very, very difficult to do. Both my wife and I, to be in this game, you have to be devoted to what you're doing, but it can be all consuming, right? And it would be, going back 5 years, it'd be literally try to find some way to physically turn off your mind from thinking about business. Have that switch, try to find that space where you can really disconnect. And again, I'm still struggling with this.
I have a good way to do that is now legal in Ohio.
Okay. And for our next episode. I knew it. Sports.
I think for mine, my piece of advice to my younger self, I think that trusting your gut a little bit on like feeling the ick on certain things where you kind of feel like pot committed, like you need to go for it. There's a little bit to Kate's point of like being able to walk away from something because you don't feel like it's right. I mean, at the end of the day, and Avishar says this all the time, is like the businesses are a reflection of us. And if you're not 100% into the thing, how is it going to be successful? And I think when Chapman's opened, I didn't have a kid at that point. I was super excited to have my own thing, and I was there every single day for every single service. Those things change over time. And I kind of wish that I had set up a situation where I was that stoked about it, but it could have run without me for a period of time because I didn't know that we were going to have a kid and all those things. And it was almost like a shock to the system. And then we opened number 2, and then we opened number 3. They're all different concepts. And it's like, I need to be stoked about every single one of those. And you're just not able to keep your eyes on everything at that point. I think being a little bit more pragmatic about expansion and making sure that the passion is there for every single one. If you're feeling the ick, trust that gut feeling and like be okay walking away from the situation.
My last advice for other people, I guess for me also, but my advice for other people is to make sure that you have the paperwork, have the lawyer look over everything.
Tax accountant, bookkeeper.
Yeah, like
Tax accountant's a big one.
have your experts make sure that they've vetted everything. Have other people read leases. Have other people look through your partnership agreement. Make sure your partnership agreement is an actual thing you're going to be able to like lean on.
I think that us restaurateurs, for lack of a better term for us, are all a very giving and open group. I think that finding someone who's walked the steps before, like us, to ask the questions of, like what you do, like don't be afraid to ask the questions.
And don't be afraid to get a second opinion either.
As much as you can take the emotion out before it gets emotional, better. Okay.
And don't be afraid to get a second
If you were to
opinion.
swap, let's just say we're going to swap VJ and say VJ is a startup founder. He's the guy you're talking to. What, in your eyes, would be your parameters of seeing like this is what this person's role should be in his business? So, what is he a mascot? Is he a motivator? Is he supposed to be everything? What would be an ideal candidate?
This is kind of my number one piece of advice for founders across the board is that you get in and you start a business, and the very first thing that's going to happen is the market's going to punch you in your face, and it is going to expose what you're weak at. It's like what Mike Tyson says, everyone has a plan until you get punched in the face. When you're starting a business, that's what happens first, right? Because we all have strengths, natural strengths. At least I know I was naive, is what are my weaknesses? And so the market's going to punch you in the face, and it's going to tell you what you suck at more than anything else. And so much about survival is how do you respond to that by filling those gaps with partners, with team members, so on and so forth. So what I look for is somebody who has self-awareness, like who can articulate to me the things that they're good at and also the things that they are not great at. And then here's my strategy for building out my team to help me and help us succeed if I'm going to be an investor in that. Investing in a person who has a high degree of self-awareness for what they can do well is really, really important.
To bring that back to the beginning, do you find that person is often the home run hitter or the quiet guy in the back and people that you've interacted with?
We're always talking to the person that is the spokesperson for the organization. And it's actually a really good question because often like the founder may not be the best CEO over time. Like for me, one Asset Watch is a 220 person company now. You want to know the last thing in the world I want to be doing is being the CEO of a 220 person company and running the day-to-day of that. So I knew early on that what I love is the early stages of company formation. And when something starts to grow, the best thing that I can do for me, for stakeholders, for the company, is find my replacement. When you're dealing at the very, very early stage, it may not, the person who is talking to you may have to be that person that's sitting in the background because that's the only person that's there. What you want to discover is you want to give grace for getting to know that person and who they are and how they'll best contribute value over time. But the more self-aware they are of where they ultimately need to be in that organization, the better.
Sometimes in the restaurant, we find the person that's going to be the dishwasher, the person that's come in with no expectation. And they always like, when we see us, I would say in the startup way, it's like you're a rock star. And they don't know it. They're just like, hey, I'm here to just do this thing. I've always kind of been in favor of like empowering that sort of thing where it's like, can trust them with your voice because they just want to do the best for the business or everybody's voice. And it seems like those are harder things to find because we're always like looking for the home run. We want like the big results. Like it's like
you're a builder and you're looking for your maintainers, the people who will maintain the flow so that you can continue building.
I would say it's the equivalent like risk bet in restaurants. It's like we try to bet on somebody that may not have the culinary school background of the shops, but sometimes they like
somebody that's trainable.
Who know your way.
I would bet on that 100% of the time.
People that's trainable.
All right, well, that was a delicious conversation as always, guys. And now on to our favorite segment, or maybe our not favorite segment. We haven't decided yet. A little catch-up of the day. So who would like to go first?
I'll go. So we made it back home to Philadelphia to see Jamar's G-Mom, who's 99 years old.
Oh, my.
So we definitely had to make that drive home to say what's up to her. And then on Black Friday, I want to give a shout out to Larice Purnell. He is the founder of Financial Foundation. So he teamed up with Huntington Bank and did a Tri-City cash mob. So the 3 cities that they went to was Cincinnati, Columbus, and Cleveland. And Marlowe's was the Columbus restaurant that was patronized. So we were very happy about that.
Awesome. Anyone else? Kate?
My son just got accepted to college, so all of my stress
Oh,
is now
congratulations.
financial.
My catch-up of the day is actually a little sad. My in-laws' dog that's been with them for a very long time, unfortunately, I had to put her down this weekend. So shout out R.I.P. Mia. You'll be missed, little girl.
we just got done with Thanksgiving. So we do a fun thing for Thanksgiving. We started off as kind of like we wanted to take the stress off our staff. So we do the day before Thanksgiving, we shut down. We do a full stamp, like a family meal, like a Friendsgiving for the whole company. So this year we ended up we do like smoked turkey for all of our staff. We did 82 turkeys this year.
Wow.
Oh, boy.
Next year, I don't know what we're going to do. We need a bigger smoker or something. I don't even know how we
How'd you even fit that many in there?
I don't want to talk about it, but it did work out. And it was nice to kind of just have everybody together and just in like enjoying something. I think any excuse to have a part is always
Yeah.
And then we did the family one after, which was like only 200 people. So yeah.
I mean, the eating holidays are always the best. It's what we live for. So
Do you guys ever get a break in your eating holidays, or do you all have to cook for them?
I made a vow 4 years ago that I was never cooking Thanksgiving dinner again because it's just too stressful moving around. I just want to spend time with my family. But this year we did, like you, we did 32 Thanksgiving packages that people purchased, and I just threw a little extra one on there for me. So all that I really had to do was reheat things and cook a turkey that we had prepped over at Here8. So
Fantastic. I also did a similar thing. I know that Thanksgiving can be a crazy place for a bakery, and I would prefer to spend it in national parks all alone. So that's generally what we do. This year we didn't because we're still recovering from a couple of surgeries, and we're celebrating my son getting into college.
how do you guys do your own turkeys?
Oh, no, not this year. We went and just visited family. They had Thanksgiving dinner at Jamar's grandmom's house. So all the family came. So they had some family come up from Florida, and one person came from upstate New York.
And now on to our favorite segment, or maybe our not favorite segment. We haven't decided yet. Underrated, overrated. Kate, you are normally the best at this. Do you want to rapid fire some overrated, underrated?
Sure.
And Will has to answer the first one. So
Please feel free to cut any of these. Okay,
Oh, yes.
so it's Thanksgiving here, just passed. So let's go into cranberry sauce.
Way overrated, unless it has the real cranberries in it.
Yeah.
So
Fresh made for you.
I would say that that's kind of in the middle, but otherwise completely overrated.
I may go overrated.
Underrated.
Underrated?
I'm not familiar. It's new to me, so I didn't always have it growing up. So it was very cool to have this can. But I think what is overrated is if it doesn't have the ridges, then it's over. You spend too much time. It's got to have the ridges. If it has the ridges,
Well, how else are you supposed to know where to cut it?
Exactly.
overrated. Like it.
What's your thought?
I'm a lingonberry person, so I think that's the American cranberry, right? Is the American lingonberry is the cranberry?
Is that overrated or
I
underrated?
thought the cranberries were American.
No, that's what I mean. Like lingonberry would be the American cranberry is the lingonberry that I want.
Oh,
right?
now I gotcha. Okay.
Yeah, I didn't do a great job of saying that one,
You also didn't answer the
I
question.
also-
but I do love it. Has a nice foil, a little acidity there.
3-2.
Yeah. I'm a latecomer. I didn't have Thanksgiving growing up the way that we had it. So,
It's interesting. Yeah, same.
okay, restaurant week menus, participating in local restaurant weeks.
We don't.
I'm gonna say a soft overrated on that one, only because I feel like people don't put major effort into it, and I feel like if you do, it's actually underrated. But most of the time, you see people just doing a layup, 3-course, whatever menu, and I don't think.
I've always
that's
wanted to
really
ask a
cool.
follow up. Are the people who come in for restaurant week to Chapman's or any of your other locations, are they your normal client? Are they your normal customer?
We've never participated in Restaurant Week before, but I think that kind of the point of Restaurant Week is new guest acquisition, which if you're not compatible necessarily with the guests who are coming in, I don't necessarily view it as a positive thing. However, I feel like if you continue to just do what you're good at and don't do a cheaper, a dumbed down, as some people say, menu for Restaurant Week, but you stay true to yourself, which I'm sure that if you do it, that's exactly how you do it, then I think that you can have new guest acquisition in a way where you're still like speaking honestly about what it is that you're doing for people so that you're not incompatible.
Yeah, we did what was called Restaurant Recovery Week. So anybody that works in a restaurant have to work Restaurant Week, they get half off. But seriously, they get half off the menu the next week because we know what it's like to work restaurant week.
Yes,
So
yes.
we find a leverage in it. And
I love it.
I think the concept actually is underrated because it's like if I was a diner, it'd be cool to have options. I think it is being executed in an overrated manner because it's just being used as a term. I can say like, here's this group of people direct from.
And to just get people to come in.
Yeah, and if we
to
had
get
some
sales.
if we had some structure behind it,
Yeah.
and we're like, hey, this is a good way to
Agreed.
promote 7 businesses. If we all talked about it and said, hey, we want to do this, but generally it's the overpowering entity that controls it, which I don't know who it is anymore.
I used to
It is- that's-
participate
So
in
maybe
it as a
Kraft
consumer
Heinz,
a lot.
Kraft Heinz Away from Home can sponsor a new type of Restaurant
Right.
Week where we
Give us your best.
They must.
Yeah.
Yes.
We don't participate. It doesn't make sense for our concept.
We don't do it because the one reason that we don't do it is because a lot of our staff has worked in restaurants. So that's one of our unsaid benefits is that you don't participate in restaurant weeks. So we don't do that week. We're like, oh, that's good enough for you.
You know, Restaurant Week will go downhill if Chipotle starts participating.
How about you from
Could
a
you imagine
diner
that?
standpoint?
I think they're relatively overrated. I love the concept of them. I'd see them mostly just not executed well.
Yeah.
I agree with the group.
What about large multi-page menus versus very small limited menus? I know that I'm giving you two things in one. But
Is that 2 questions? Did you
I
start
think
with what?
Which one would you prefer? Question.
we'll start with the long multi-page menu. How do you feel about having a long multi-page menu? I'm asking people who have very small kitchens, so I already know how you feel.
I would say overrated, but it has nothing to do with the kitchen. It has to do with attention span for me. Like when I see a large menu, I don't know what to do. It's very challenging, even especially in this day because our attention span is so short. Like how do you even start? And it feels like to me that seems like manipulative marketing because what your placement of items is going to matter more than the item itself. And I know that that's a true fact in life, but I don't agree with it.
I'm going to attack this from a point of quality and actually say something that you probably aren't expecting. I actually think that they're overrated if the quality can be kept good. I've mostly found that large menus, the quality suffers because you just have too much stuff going on.
I'm going to interrupt for 1 second. If it's a Chinese restaurant, underrated.
That was
100%. If you cannot read any words in English, then it's 100%.
That was
it's
the
underrated.
exact
Yes.
example that I was about to give. Is we just ordered Chinese food
Yes,
when
yes.
my family was in town, and they had like anything that
You can
anyone
have-
wanted.
You can
and
have grilled wolf on the stove.
Yeah,
You can have
and
barbecue. You can have
it was,
so whatever
it was
you
great.
want. It's
Everyone
amazing.
got what they wanted, and there was no like fighting over it. It was great. So if the quality had been slightly better on all the things, just even like 10%, would have been an absolute home run. So I know that's surprising, but I'm going to go overrated on large.
Overrated.
They're overrated, right?
Yeah.
Same.
Okay. 7 day being open 7 days a week.
So here's the thing.
I mean, we're talking about finances, so like
Well, that's
That's a
leads
huge
me
one.
into a very interesting situation where this year, 2024, we had to restructure everything that we did at Chapman's. Our prime cost was no longer matching everything else, and we had some decisions to make. And one of them is we could just raise prices across the board and shoot for a PPA that was much higher, like closer to $100 a head on an a la carte menu. That's a lot. Puts us in a different tier than the one that we had necessarily shot to do. Or we had another option, which was to just raise the floor a little bit, and we decided to open all 7 days. And we actually lowered our labor cost year over year. We opened 2 more days and our labor costs went down, and our revenue went for the last 2 quarters of 2024. So as much as I don't want to work 7 days a week, or Sundays for that matter, I would say that opening 7 days a week is actually underrated. And if you'd asked me a year ago, I would have given you an exact opposite answer to that.
The reason that I'm going to say underrated is because of a place like Waffle House, which what it offers is, for us as people that offer hospitality, if we're able to be in a place that we can do that, it is one of the best feelings in the world to know that there's a place in comfort that you can go to have on it. That's what we want to do. I think it's the ideal situation would be, it would be awesome to do that.
Scratch the itch when people want.
Yeah, and just like when you have that craving, that's the thing that makes the most upset. You're like, I can't get it because of this, but what if you could? I think that if you can do it really, really well, it's absolutely underrated. But I think there's everything leading up to that. If it can't be executed well, then overrated, because if you have one shitty experience, then also it's everything. It doesn't matter what day of the week it is.
Underrated.
Like, you want to be open 7 days?
I personally don't want to, but most places in the restaurant industry, they're closed on Mondays. So by you being open, it gives consumers
So it's an
access to you.
It's a chicken or an egg thing. Do people not go out on Mondays because no one's open? They're trained. Or restaurants
Go
not
to
open
Lindy's.
because no one goes out on Mondays?
Go to Lindy's on a Monday for lunch. That place is stacked.
Yeah.
It's crazy.
So why are you guys closed on Mondays?
We wanted to give the staff one day off, but North Market is open 7 days a week. So we don't have a choice.
They didn't give you any provisions where you could choose?
No.
Yeah, okay.
You get a certain amount of days where you can close for the year, but they're open 7 days a week.
And have you found that to be good? Do you like it, or is it obnoxious
been
that you need to be like on?
Well, we're in the winter month. We're going into the winter time, so it's a little bit slower from a foot traffic standpoint, but they do get a nice lunch. So,
I think the other side is,
and it gives the staff hours.
that's true. If it's 7 days, and not the same thing in 7 days. If you have like a team, or take 3 days, but you know what? I think that's also potential to say that we have a new way to approach the business if you have it on board.
My current conversation with my staff is about holiday parties. Some people feel very strongly that they don't want to go to a party. They'd rather just have the time off of work. Other people really want to be celebrated or have that kind of collective non-work conversation. How do you feel about holiday parties?
Underrated.
You think you should?
Oh no, I'm sorry. Overrated. We give a bonus. We do a Christmas
no
bonus. No party.
Okay.
First year, we're not doing the party at Sweet Aromas because we now consider them overrated. So it has been a point of contention of a lot that goes into it, and you got a very low percentage of participation.
I mean, I like the party. It's the only time that I ever get to cut loose with the team. I have a strong rule. I don't go out to the bar with the
Yeah,
team. So it's literally the only night that I actually can be myself and hang out with my team. So, all right, with that, we will move into the dessert, which are our parting thoughts, which is one thing that our listeners should be sure to take away from this episode. Abishar, what do you think the one thing that people should take away from this episode is?
I think it's a pretty common thing nowadays, but it wasn't offered as nice to me in the beginning, is the more you learn, the more you realize what you don't know. And having the awareness of that can take you a lot further than the times that you hear nothing in response. I think my biggest flag, the thing that I've learned, is I hear no feedback and I get concerned. So feedback is super important in all of these, especially when it comes to money and things like that. Make sure you get the feedback loop going and you approach it honestly and earnestly.
Yeah. Shika, what's your biggest takeaway from
I would just say do your due diligence and ask a lot of questions and just make sure that you're getting the right advice before starting your business.
Kate?
I found Will saying that he's investing in the person, not the concept, like kind of a moment for me to consider.
I think for me, my biggest takeaway, or the thing that I want the folks at home who are considering possibly opening their own business to take away, is that there's a million ways to do this, and to find people who are experts in it to help walk you through. And then at the end of the day, trust your own gut in it.
But be careful to not pay the experts online. Don't do like Fiverr for investors. Yes.
No, I mean face to face. Talk to Will, basically. Will, what's your biggest takeaway from this?
Actually, is what you mentioned. I think you mentioned a very specific instance, but it's broadly applicable. It's very easy to get complex very quickly in starting a business in this type of business. and I would strive to keep things simple because it's always easy to add complexity once you go. Very hard to take complexity away. So whether it's the concept itself, how you think about financing it, what goes into it, just try to keep things as simple as possible. Because once you go, there's going to be a whirlwind of challenges to deal with.
Thank you, Will, for joining us today. This is really awesome to have another person joining the roundtable with a different perspective. Can you tell the people where to find you, your stuff?
Yeah, first of all, I want to just give a shout out to you all for being in the grind day in and day out. And this is like a world of wealth and information and learning for people that want to start a business. So I would recommend people talk to you way before they talk to me. But you can find me online on LinkedIn, Will Zell. BuildVessel.com is our website. WZell@BuildVessel.com is my email. Feel free to reach out to me. I love founders. I love the founder's journey. Anyone that's willing to take the risk to pursue their dream is worthy of our time and attention and our support.
Awesome.
So thank you.
Thank you.
Thank you.
Thank you for joining us for another episode of Restaurant Roundtable, brought to you by Kraft Heinz Away From Home. If you like what you heard, please smash that like button like a turkey sandwich. And we'll see you again soon. As you might expect, the opinions that we express on this podcast are just that, opinions and for entertainment purposes only.
If you love this podcast, help us out.
Give us a thumbs up.
Also, be sure to go to craftheinzawayfromhome.com and sign up for our newsletter.
So remember, if you liked what you heard today,
Please head over to craftheinzawayfromhome.com and sign up.
We have got all sorts of exclusives coming with special insights, access to marketing, and a lot more.
Of course, subscribe, share, like, all those things. See you next time.